policy. Hey, Bob.
Hello, Marissa. That's very true. Time now for ETF Edge. Those lousy manufacturing numbers out of the Eurozone reviving concerns about slowing growth. Flash composite PMI contracted in September for the first time in over 6 years. Flash manufacturing PMI, the lowest in over a decade. So what does all this mean, and how can you play it using ETFs? Here to discuss that, John Davi of Astoria Portfolio Advisors, Alfred Eskandar of Salt Financial. And Alfred, this has been going on for years now. For 5 years, Europe has underperformed the U.S. I think the European ETFs, the VGK, some of those big European ETFs, they're flat in the last 5 years. The S&P 500 is up 50% essentially. Why this continual underperformance, which even today is happening?
Well, you could make the argument it's a flight to quality by region. If you look at the European markets, decentralized, you got different political issues in each region. Certainly Brexit for the last year and a half has not helped build any confidence and consensus. So when you're looking at Europe, you got to look at it in two ways. One is, do you believe that there's going to be some QE, out of the ECB? And if so, then you're going to need something that's currency hedged. If not, then you're going to want to look for broad regional or even specific country exposure.
And the bottom line, John, is their economy there is just less dynamic than ours. I think that's the simplest explanation. But in terms of how you play it, how about that hedge currency idea? There is one out there, HEDJ, that's the wisdom tree, that hedges out the currency effects. Correct. Weaker euro, that makes some sense. That's been doing better this year. That's been outperforming all the other European ETFs.
Yeah, we subscribe to that idea as well. We're happen to use the IHDG, which is all of Europe, along with it's the entire EFA index. So bottom line is that IHDG is high quality stocks. So it's complement to the DGRW that we're using in the U.S. So I do think you want to own some Europe because the valuation spread of Europe versus U.S. is at multi-decade highs.
You love the word quality. What does that mean to you? What do you own in quality that you don't own in, say, the iShares ETF that we just put up, which represents market cap weighted broad European stocks? What's quality?
Yeah, so it basically in the IEFA or the EFA, it's a lot of the European banks, it's a lot of the Japanese banks, it's a lot of the cyclicals. So if you look at the IHDG, they tend to strip out a lot of the financials. So it's the higher quality stocks within Europe and the EFA region.
And is there any chance that this is going to turn around anytime soon? We have higher rates here. That is a byproduct of the fact that we have a stronger, more dynamic economy. I think so. Is there any hope that this is going to turn around in Europe?
I don't see anything in the near future. If you continue to look at just Q4 alone, you still have Brexit concerns out of October 31st. There's just way more uncertainty in a fragmented market. I think the U.S. continues to be a much safer play.
Yeah, I think the catalyst is that now you actually have central bank, you've got the ECB with this open-ended QE program.
Okay, thanks very much, John and Alfred.